Hi, thanks for tuning in. This is a weekend review for the week ending November 24th. Happy Thanksgiving. November has 4 more trading days in it, and then we have the last month of the year. It's been a good year for the S&P 500. It's been a good year for tech. QQQ up almost 40% on the year. And it's been a bad year for the transports, and it's been a bad year for small caps. However, we're looking at a chart here of the transportation ETF, IYT. And what we have is, 4 straight weeks green, recapturing all the moving averages after closing below the bottom of the Bollinger Band on the weekly time frame. We did go from a breakout here in June to that breakout ending in August, and that took price all the way to closing below the other side of the band. And as soon as she did that, boom, right back to the middle. These bands have a way of terminating the auction. Not necessarily right away. Obviously, you have to lose this yellow line, as you can see. Either bear, right? That yellow line is your signal, that yellow and orange line. So yeah, we've got this bear trap. We have the structure here of this left shoulder, head, right shoulder. Zooming out to the monthly, you have this throwback, right? Resistance, 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 breakout, back test, higher low on the monthly for sure, higher low on the quarterly. And now at the high of the quarter, again, this quarterly 20, the slope is up. The 50 is below the 20, and the 10 and the 5 are above the 20. This is a bull trend by definition. Pull back to the 20 is your mean reversion within the context of an uptrend. This is how the market works. It oscillates. And again, it doesn't matter what time frame we look at. See how these bands tend to terminate auctions. What do I mean by that? I mean that 95% of all price action is contained within these bands. Let's zoom into the daily. We had this long downtrend, finally broke with the right shoulder, recapturing this point of control and rallying. I mean, this blue line is still the highest it's ever been, but the histogram is starting this phase here, in my opinion, of the much larger advance into likely the end of the year. Right, so if this is where we are here, this thing's going to end something like that, right, January 9th. That's pretty much all I believe this market has left in it. Just into OPEX into January at the latest, and then ultimately, depending on how high they get, we learn something new at that point. But either way, left shoulder, head, right shoulder, histogram way higher than it's been really at all in 2022. And looking at this, right, we've had a lower high on the monthly for a very long time now, okay? And as soon as this higher low, higher high, higher high, sorry, high, lower high, higher low, higher high pattern changed, right? Because you did have just this high, low, lower high, lower low, lower high, lower low pattern, right? As soon as that changed, you were met with a 21% decline in 3 months, which is quite incredible, really. Because again, where are we? Well, default back to large corrective thing within context of uptrend, right? That's what the quarterly is telling us. And if we look at this, we say, is the corrective thing over? It's really hard to tell. The low here is 241 and a quarter, 244. So now we're overlapping again. You certainly had what looked like a zigzag here. And now Other one up. I don't know. We're just going to have to wait and see. Too subjective. All I can say is, as long as she stays above here, our target's up here at 250. And then if this is another, right, you do something like that. There's your 250 target. But if this is like another left shoulder, head, right shoulder, and then this is the start of something brand new, you could see something like this come all the way back down before really launching. It's just so hard to tell. Either way, the point I'm starting with this chart is we've got the throwback complete after the breakout, right? So we've done those things. Then you got what looks like a nice little move here and a retracement back to where that move started. So now histogram is either going to flip, or this is some big trap within the context of a downtrend, which we know she is. Well, at least on this time frame. So, bear trap set, instantly recaptured the high, instantly recaptured the 200, and now above all the moving averages. That is bullish. As long as that remains, to me, IYT looks very, very healthy. Start with the other one that's not doing so well that I talked about, IWM. See, this one can't get above the 200. This is very bad. Now, one could argue that it's just testing supply and will catch up just like IWM. But like IYT, sorry. But IWM, right? This is a higher low relative to the October 22, right? October 23, putting a higher low. We have a lower low here. And this is kind of the problem with every bull thesis, is that IWM just cannot participate. Has not participated in at minimum 2 years and 9 months. So that's well within the average bear market. But really, it has not participated in about 5 years. 3% change in 5 years. So again, as long as this remains a problem, I don't trust the rallies over here. And what do I mean by that? I mean, I was looking for a 5-wave move to complete somewhere around all-time high. Coming soon. Just like we had here on SMH. Looking for that 5-wave move to complete somewhere where? Up here around all-time high, and then come back in and put in some handle. Now maybe the cup and handle bit already happened for SMH, and she's leading the way for QQQ, cup and handle. All right, breakout, cup and handle, trying to break out. All right, now these are, you prefer the more traditional cup and handle that you have here with SMH, right? Completely horizontal. It's exactly kind of what you want to see there. But looking at IWM, I mean, this is just on the absolutely other side of all the moving averages. Still down 26% away from all-time high. And I mean, so is IYT. IYT is doing better for sure, but she's 13%, right? So if IWM can't play catch up here, can't recapture 186, has to get above this. If she can't, then the assumption from where I sit that looks like an ABC. So, I don't know. Assumption from where I sit is new lows are coming, right? With this ETF. And if this ETF is putting in new lows, I don't know how everyone can march forever. Okay. That's been my mantra for the last 4 months, since about this time frame. In the middle of the summer, Now, moving forward, I'm going to take a look at some of the intermarket analysis to see if we're seeing any change here in anything. So SPY versus TLT, no change. SPY versus gold, possibly another lower high, but we just don't know. SPY versus UUP, putting in a buy signal, put your cash to work. SPY versus DBC, already put in a buy signal, looking to see if she can recapture this 20 level, or is she going to fall short and put in another lower high, kind of like I highlighted here. All right, if they come up here to this 16 level and then pull back and then start pulling all the way back to 13 again, it's like this thing would be done. Okay, so this is very important that she breaks this 16 and that this buy signal is confirmed. IYT versus IWM. So again, transport still outperforming small caps. IYT versus QQQ, putting in this divergence. QQQ versus IWM, no change. SMH versus IYT, no change. SMH versus SPY, no change. So everything here continues to tell us to favor equities, and particularly to favor tech in the form of SMH and QQQ. Now, if we look at some more quantitative analysis, right, here's the last breadth thrust was November 3rd, and the earliest a bear market has ever started following a breadth thrust was 13 months. Okay, so we can infer that we should be in a bull market until December 2024. Now, the only way that's possible is if these ratios start to flip, IWM and IYT start to outperform QQQ and SMH. Okay, just like they did back here, June 20 into May of 2021 for the transports. This entire period, small caps and transports outperformed QQQ. It outperformed SMH. I know that sounds impossible given what we've just experienced, but that's what's possible given IYT's bear trap and the fact that IWM did a similar trap by looking below 162 and completely recapturing all the short-term moving averages and reverting to mean here at the 20, which is about 180. So again, any pullbacks are expected to be bought across all equities. We'll zoom in here to SPY just a little bit. I mean, I've already shown you, I believe this to be a cup and handle pattern. But that being said, we've gone right to the edge here, right? No one wanted to participate down here. Now everyone wants to participate up here. And it's possible she just comes and runs straight to an all-time high from here. But what's also possible is she pulls back to the 20 or the 10 before doing so. Just like she did back here. See that pullback? Okay, so my point is, given how she's right here at supply again, the prudent thing would be to wait for a pullback to the 10. But the reality is, above all the moving averages and all the time frames for SPY, QQQ, SMH, there is nothing bearish here. Throwing the ball around to XLF, this was a perfectly timed triangle, as I pointed out many times. ABC, DE, a symmetrical or contracting or coil triangle has now broke bull. You now have a direction of the break. And what should you expect from here? You should expect the bands to start to separate, just like they did back here. So this is the target short term for XLF. And if XLF is breaking out, this will lead IWM. So again, no reason to be extremely bearish given the breadth thrust on November 3rd, given the bear trap that we've seen in IWM and IYT. Although they've been lagging, they've now produced technical signals that lead me to believe that the downtrends have ended. Okay, I know that's a lot. We're going to zoom over to gold. Okay, in an uptrend. Histogram says buy the dip. However, as I zoom out, this divergence on the monthly and quarterly continues. So these marginal new highs that she sets each time and then pulls back is actually not healthy. Okay, what do I mean by that? I mean that this is the supply line, has been the supply line, 185, 186. But now as you put in these marginal new highs, what you're doing is you're allowing people to enter short on new all-time highs as the breakout crowd calls bull market. Really, no breakout has occurred. And from the standpoint of where I sit, right, she's got to get above 200. 200 psychological. And if she can do that, then there's no reason to think that this bull flag cup and handle thing isn't in motion. And if it is, this thing's going to $800. That's simple. And if it's not, then look for something like this to happen where price comes all the way back down here to 100 before ultimately doing this whole number. Okay, so I don't like to make projections and predictions. I could say that this thing is long on the monthly, it's long on the quarterly, it's long on all the time frames. That being said, it has not broken out, and to break out, I need a convincing close above that 200 psychological level. If you look at bonds, I see nothing, no change in character, absolutely the same. Okay, there is a close above the previous candle's high, or at least an attempt to do so. That being said, has to get above the 91.85 level. So far, has not even hit that level. And from a downtrend standpoint, I mean, it is as clear as day. This is a downtrend. And we've not gotten to this blue level down here yet, which is where I fully anticipate the stock market rally to end, bull market in the stock market to end, and the bull market in bonds to begin. And for these two to be negatively correlated as that happens. Now, it's possible that correlation changes. So keeping an open mind to all outcomes. Point being, this is a downtrend. Nothing has changed, even though she's outside of this line on the downtrend. This is a downtrend, and we are way, way too early to be calling bottoms, just like everyone who called the bottom back here was way too early to do so. All you had was a big trading range. You would have then needed a break above this high here for a new bull market trend to begin. Until that happens, the downtrend will take this thing lower. Avoid bonds. As you look at cash, again, same problem. This is why all those intermarket analysis ratios are favoring equities, right? This is an outside bearish reversal candle, and she's now below EMA 5, the yellow line. This is a lower high on the monthly, right? So you set this high, 3875. Okay, so you've got a high here in the PPO, a high in price. That's good, confirming each other. Now you've got a lower high, lower momentum. That's fine too, nothing there. But what I will say is, why isn't this on the table? And it certainly is, because she did not set a higher high. Now she's going to pull back to this green line again, which has been demand. So I'm bearish UUP until she gets to 2860. Then we're going to see if this thing's headed to 27, or if we're now going to then march up to an all-time high again. So at this point, short-term bearish on the dollar. But again, pulled back right to the 20. Bear cross, histogram flip negative. These are sell signals. I'm not bullish the dollar. So let's take a look here at Bitcoin. And then a few individual stocks, and we'll wrap up this video. There's no reason to keep it going. Okay, here's Bitcoin at the top of the band. Remember, this is where things tend to terminate, not where they tend to begin. They can begin. Long-term breakouts certainly can begin, right? Like right here, this thing broke the top of the band, instantly pulled back to the middle, then started rallying higher. So yeah, this thing, you could argue, started this entire move, right? Even though you would say, hey, it started here by closing below the bottom and then recapturing the 5. Sure. You could also argue it started here, capturing the top, pulling back to the 20, confirmed it was demand, and now she's rallied 19 to 38, basically a double since that condition happened. All right, so you try to look at these things objectively, but the bands are telling us when these auctions are starting, ending, okay, and what that looks like. So we're at the top of here. What does that mean? We're interested more down at 30K. That's what that means. May not get there for a while. Here's the daily, okay? PPO is pointing down as price goes up, not what you want to see. At the top of the monthly band, and the monthly band is pointing down. Again, not what you want to see. That being said, this could be the start of something if she can close above 39K or the top of the band here. Right? What is this? 38,513. Close above 38,513 by next Friday, and you could have a breakout signal just like we did back here, right? Where this PPO really starts to accelerate and separate itself. The histogram on the bottom here is rising positively. It's just like what we had back here, okay? But what has to happen? A close above that 38, 39K this month, and then you must hold it. Only then will you have what you need, right? What you could have here is really a period more akin to this, not akin to this. What do I mean by that? Your high here gets put in, and that's right here. You pull back to the middle, or the 40, or the 50 or whatever, pull back to the blue line, bottom of the bands. Now a rally ensues, boom, rally ensues. We pull back to the top of the band, and then what? Pull back to the middle of the band again. So it'd be perfectly normal to pull all the way back to the middle of the band. That's all I'm pointing out. And possibly even this line here one more time at some point down 2024. Okay. So we're either looking for breakout, i.e. close above the top, or we're looking for this thing's terminating, i.e. back to the middle of the bands. Okay, that's where we're at with Bitcoin. The way I play Bitcoin is Riot, right? Has anything changed here? I'm going to take the bands off for this because it just makes it so hard to read. Has anything changed here? No. This is exactly as it was. I will say we're almost getting that buy signal here, but could certainly fail and fall lower. It happens all the time, just like it happened here. Okay. So, this point really just got to get above 14 because this is your left shoulder, your head, right shoulder type setup, and here's your neckline. Okay, so that's how I view this. I'm not eager to jump in. Again, I see some gaps up here that are likely going to provide supply, and until she can get above this is a textbook head and shoulder from where I sit. Existing uptrend, and then this topping process. We put in a high, a marginal new high, a pullback, just right back to that same high of the left shoulder, and then you fall. We just don't have enough data yet because this chart is dependent on the Bitcoin chart that I just showed you, and the Bitcoin chart could be breaking out or it could be pulling back to mean. Keep it objective. Try not to have a bias. All right, let's take a look at some of my favorite charts. Well, actually, let's start with NVIDIA, just because this thing has been on everyone's, minds as ER was this past week. So we had a little bit of an alert. Let's clear that off the chart. Okay. So when I look at this chart, I'm seeing a large trading range. That's it. Big trading range. Big gap up here. Distribution. Okay. You can see this here in all the distribution candles. At the bottom, all red. Where's the green? The green's back here. Okay, so they bought it back here at 225, and now they're distributing it up here. And if it can survive the distribution cycle, this whole thing, then it's possible she keep going. Right? There's no reason to think she can't. Okay, EMA 5, SMA 10 bull cross is still in play. And until this thing flips, there's no reason to get bearish. Okay, I'm just pointing that out. However, there's also no reason to own the thing if she's going nowhere. What do I mean by that? Every time she gets to 500, it's a sell. Every time she gets up here, it's a sell. Every time we come down here, it's a buy. Right now, you certainly have an expanding range. So, right, check this out. Right, so it certainly can keep broadening out over time. Meaning, any rally up here, sell it, unless you convincingly hold above this 525, 530 level. Either way, this is supporting the rotation thesis. This is a name that has led for the last year and a half. Okay, 1 year and 1 month, this thing has been leading higher. So it's possible she will continue, but in order for that to happen, she's got to break this trading range, and that has not happened yet. Okay, has not happened. Let's take a look, though, at this chart here real quick. And so this is performance going back to the start of November. Here's November 1, okay? Right here, November 1. CRISPR is up the most on the month. Soxel, Shop, EMPH, TQQQ, ARC. Okay, so these are some new names. Because if I go back year to date, it's all NVIDIA. It's all TQQQ, SMCI, Bitcoin, EDU, Shop. You know what I mean? Like EMPH isn't here. ARC's way down here. Right? These names have changed. So if I just go back like month to date, it's CRISPR. It's Shop. It's ARC. It's Tina. Right? If I go back to the beginning of November, like I just showed you before, it's EMPH. So you've got, it's FAS, right? It's XLF like I was showing you. So you've got some new leaders in here. That's why it's important you got to watch this stuff. And so like I was showing you XLF, I mean, it's like FAS is where it's at. All right, obviously this is not the same as XLF. That's a 3X ETF. However, this chart looks very, very nice. This is a breakout in motion. If you look at things like Crocs, like I like a lot, you have this 5-wave move up, 3-wave move down. The relationship between wave A and wave C is 1.0 extension. That's where the buyers came in. You're now getting the bull market, the same signal you got right here that started this advance. You're now getting that again. Okay, which targets about 250. This pattern is exactly what you need to see in order for this thing to really get going. She's got to get above 101. Just has to happen. That being said, I like this name. Any dips into $90 in the coming week, I'm all over. I like this name a lot. Okay. The last time she fired a buy signal was back here this week, October 16th. And it was instantly met with a sell. Okay. So this trading range here is what we're looking at as the first target. But really, you've got a nice little gap here on the weekly that was filled at $73.62. low of 73.49, and you've got this fib extension at 77.30. You have the structure of a 5-3-5 corrective pattern back down to the COVID highs. Here are the COVID highs, or the pre-COVID highs at 50, 59. Right, this is at February 17th. So you've got this correction all the way back. We'll call it a throwback. This has been, and again, I go to this all the time. Let's go back 5 years. All right, it's EMPH, it's NVIDIA, AER. These are the names you want to own going back 5 years. Okay? Put these names in your portfolio and stop overthinking it. These things are outperforming everything else by a mile. CELH, SMCI, EMPH, AEHR, and NVIDIA. If you just own those things, you'd be doing fine. You could go golfing every day and no one would care. Especially you. So just keep in mind that while some of these things, CELH is only up 60% on the year and these names are up a lot more, keep in mind that going back 5 years, these are the names that you want to own. So if these things are up this much in 5 years, but they're down in the last whatever, that's mean reversion within the context of an uptrend by definition. That's what you're seeing. Okay, that's enough of my rant on that. Focus on these names, right? There's a reason these names are at the top of the list. Okay, put them in your portfolios. Yeah, they're good stocks to own. That being said, I'm done. This video is getting long in the tooth. I hope you liked it. I hope you had a good Thanksgiving. I hope you watched until the end. And if you did, hit the like button, subscribe to the channel, and I'll see you next week.